Major funding for these broadcasts is made possible by grants from Chase Commercial Term Lending and New York Community Bank, M&T Bank, Perfect Building Maintenance, Capital One Bank, the Witkoff Group, Greenberg Traurig, Genova Burns. Additional funding is provided by grants from AKA Hotels, Corman Communities, Aerial Property Advisors, AVR Realty Company, Bank of America, Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, CPEX Real Estate Services, Cushman & Wakefield, Customers Bank, DDG, Dime Savings Bank of Williamsburg, Fisher Brothers, First Nationwide Title Agency, Flushing Bank, Foley & Lardner, Friedman, Handler Real Estate Organization, HAP Investment Developers, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, James Orphanides, Chairman USRealty.com, Kilroy Architectural Windows, New York's Window Company, Madison Realty Capital, Massey-Knackle Realty Services, Matone Group, Mercantile Commerce Bank, N.A., Meridian Capital Group, Newmark Grubb Knight Frank, Newbanks, MHP Real Estate Services, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Sterling Risk, Stonehenge Partners, TD Bank, Terra CRG, the Continuum Company, the CUNY TV Foundation, the Moynihan Group, and These Friends.
It's amazing. I cannot believe it, and either can my guess. The New York City office market is proverbially on fire. The rents are high, occupancy is up, vacancy is down. Forget the term sublease. The market is strong, and it's not only Manhattan. It's also strong in the suburbs and the boroughs. New Jersey may be a different case, or Westchester. But today, I've assembled this group of real estate leaders who understand the office market better than anyone. My guests, they include Cynthia Foster, who is the president for the U.S. National Services at Colliers International. Paul Amrich, who is the vice chairman at CBRE. Mark Boisi, who is the chairman for the New York City TriState region for DTZ or Zeng. And last but not least, Scott Galin, who is the president, CEO, and principal at Handler Real Estate Organization. Did I screw up by calling it DTZ?
Screwed up the name again, but it's okay. We've only been in business in New York here for 2 weeks, so people will get used to it. It's DTZ.
You know what though? I like the zing, DT zing.
I like the
DT Zing.
I love that.
I think it's pretty
Wow.
hysterical.
Since I called
Pretty
it the
good.
Zing,
I
how is the
wouldn't
market today?
The market is
You, I don't know. It's like somebody with the 10 different business cards. You know, I had the same thing. How many different names have you been under? The aliases, but
it's all the same
joking
people in
aside,
our
I
office.
know, it's the same
Yeah.
people.
No, the market is it's as hot as I've seen it in 5 or 6 years.
Would you say it's the hottest that you've seen in your career?
No, I would say that we're approaching that. I think in 2006-07, before the financial catastrophe we went through, I think that was about the hottest market I had seen, and I've been doing this since 1975. And I think we're probably back to within 15% of the high water mark at that point in terms of this marketplace. And I think, in terms of employment, New York now has a 6.6% employment rate. You know what it was a year ago? It was over 8%. It sort of beats the national average, which is sort of nice. And, we've got 4 million jobs, which is the most amount of jobs that New York has ever had. The office sector jobs are growing like crazy. It's over 25,000 jobs. And if you talk to, my colleagues here today, you'll hear about, availability rates that are, 9%, 10%, where they were, 13% 4 or 5 years ago.
I have 3 top-notch leasing executives with the three of you, and I have Scott, who has the different side, that he's an owner, so he's seeing the different market. How do you, as an owner, look at some of the properties? And I know you recently bought a property with partners in Long Island City. How do you see the market, the office market?
Well, I was fortunate or unfortunate enough to come into this world in 2008 when I started my second life. So I came in when we weren't 6 feet ahead.
I was on my 25th life.
We were 5 feet under. So all I've had seen is accretion in 6 or 7 years. But in an absolute terms, you know, our properties are 95+% leased. We have B loft buildings in the Garment District and some in Midtown. And,
Is there a Garment District anymore?
No, Garment District. There's no Garment Center anymore. And I'm on the bid board, so we call it the Garment District New York is the name of our new bid. And it is vibrant.
You know what's interesting?
It's very
a couple weeks ago, I taped a show called The Anatomy of a Deal. I had done a deal similar to that, but as opposed to a building, this was anatomy of a law firm who had to relocate and what they went through. And you had met your people had met them.
Yes.
The circumstance that they were on Park Avenue and they moved and they couldn't find space where what they were paying, so they ended up in Times Square.
Yeah.
And, you know, originally they were thinking of 1411 Broadway, then they were looking at 1466 Broadway. They ended up at 11 Times Square. So the world changes so much. How do you see the world? Because you've had some very good years and some big clients, you know.
Yeah, I think, I mean, overall, last year was a great year. And I thought what was unique about last year, as we've kind of come out of the downturn from 08, 09, is that every part of town feels fairly healthy. And there are a few areas that have actually bypassed certain barriers, like the Plaza District, $100 plus deals. We saw more square footage in $100 plus deals last year than we did in 07. And what was interesting about that is the average size deal in 07 was like 23,000 square feet, and last year it was 35,000 square feet. So I think it shows the maturity and the level of those tenants that are willing to pay those numbers. And then also going back to what we call the Garment District, I mean, the change in that area in the last 2 years, and I think where it will continue to go, is really interesting. You know, more mature owners buying there, a lot of very, very intelligent capital. And I think that a lot of people are spending a ton of money on their buildings, like 1411 Broadway, which we represent. Collective ownership spending $30 million on the asset, and they're seeing the diversity in tenants that wasn't there a year ago.
You're also seeing rents that if we went back a couple years ago in the perceived Garment Center or in the Penn Station neighborhood, we were talking about rents in the $30.
That's right.
Those rent
For
today
sure.
are $60, so we're in a different case. You have a lot of major corporations as your clients. Where do you see them, and where are they coming to, and where do they want to be? Because that relates to a discussion we had in the green room with regard to the Hudson Yards on the Far West Side.
Well, one of the major shifts with the big multinationals and the law firms is this whole issue of efficient space utilization, and it's just incredible the difference if you go to a building where a tenant's been there 15 years, 20 years, and tour it, and you see the way they maintain their space versus today. It's open. Goldman Sachs started this with their benching, and they were kind of the go-to model for the financial service firms and what they would move to. But it really
Now, is benching similar to hoteling?
No, benching is a configuration. Hoteling is a utilization.
Right. I mean, because I did consulting for Deloitte, and I remember hoteling downtown. It was the worst. It was a nightmare.
Try to envision a trading
Okay,
desk. And
you know,
Yeah.
I had a computer move in,
Glorified
Yeah.
trading.
dial your phone over here.
No,
You know,
benching is a configuration term. But what you're seeing is 25%, companies needing 25% less space with just reconfiguring the way they
So
see
as a
people.
landlord, you'd be upset. You know, they're taking less space. But
I'm not sure. I mean, we're seeing that even in our business tenants who are coming in and wanted perimeter offices, and they wanted the center core to be for cubicles. Nobody seems to ask us for that build out anymore. They want some conference rooms, a couple of offices, and then they want a communal space. It doesn't seem to yield less space, though.
you bring
somehow.
up a very good point about, you know, build outs. You know, the world has done well.
Yeah.
Okay, we're talking about vacancy is really down, the amount of leases, the amount of companies that relocated last year. Statistically, everything, even Midtown had one of its best downtown. What is a landlord providing today with regard to a tenant, with regard to free rent and construction in a new office?
Well, concessions are still fairly rich,
Yeah.
well said, but construction costs are up, 25 to 30% year over year. So if you were afforded the same work allowance as a tenant that you were a year ago, cost of construction's up, so you're still going to spend a lot more money out of your pocket, and that's just because of the labor demand.
Do you see any potential, because we've had so many tenants over the last year or two, the Facebook, the Snapshot and all these other companies coming to New York. BuzzFeed and all these, and taking major amount of space, besides Google looking for as much space as possible. Do you see, because, there could be a potential tech bubble?
I mean, there's been over 7 million feet leased by TAMI tenants in 2014, which is equivalent to what the financial sector did, which was about 7
So the TAMI people have replaced the financial sector?
Smaller spaces.
It's equivalent to now, which is unusual.
Right, but
Very unusual.
TAMI's, I think it's more of a catch-all than just technology, because included in TAMI, you have the tried and true, which are actually on some of these companies are on the decline. You have the big publishing companies, you have NBC, you have CBS, you have Hearst, you have Time Warner. Time Warner's a big part of that number. So they've put them all together in this TAMI category, and yet you've got two kinds of companies doing exactly opposite.
Right, but you know what?
kinds of
I
things.
think that what you're bringing out is when you bring out a Time Warner, we're talking about a seasoned, established company as opposed
Yeah,
to
same with
something.
Hearst.
Okay,
Same-
Hearst
yeah.
with somebody who's or Condé Nast.
Right.
Okay, we're talking
Compared to
about,
Twitter.
We have smaller also. We have 10,000-foot TAMI,
No,
social media
Yeah.
Right,
tenants.
but
and
we're in a
youth-
different.
It's deep.
Yeah, that's
How do,
it.
you
Yeah.
know, we were
deep
talking
market. It's a
about.
deep market.
We know the Manhattan market is doing well. Let's talk about the boroughs. Okay, how is the office market in Brooklyn doing today? Do you see that at all?
I think it's very healthy, the demand over there for the I call them mature projects that are going on from some of the major developers. They've got huge demand.
What about the utilization of, for example, RXR buys a building on Vanderbilt. RXR buys in Long Island City the Packard building, okay? You and your investors buy a building in Long Island City. And these are being acquired not to convert to residential. These are being acquired to remain office, okay?
Yeah.
And then you have the space that Tishman Spires built in Long Island City over here.
Yep.
Do you see more tenants because people are working, living and work, the
Well,
tech people?
I guess a developer that I was speaking to regarding this, they said that they're big owners over there, and they said what used to happen was they would still incubate in Brooklyn, but then they would move over to downtown or midtown, and now they're staying. They're growing and they're staying.
Right, which is what
and-
Kushner is doing, trying on Dumbo.
Yes.
Right.
Yeah.
Huge success.
Yeah.
Also back office, Michael. I mean,
But you're not seeing a migration there, typically from Manhattan.
I think we're going to maybe get some back office tenants who they can't put masses of back office tenants at $65 a foot. We used to be able to lease space in our neighborhood for $25, $28.
Which-
put a lot of back office
Which
folk
is a
in.
comment that I always look at that small entrepreneur, the small accounting firm, the small law firm, and the nonprofits. The nonprofits specifically, they had spaces, but they can't find spaces. Lower Manhattan used to be the low-cost alternative. It's not the low-cost alternative.
No.
So where do we
Disagree with that.
really?
Downtown Manhattan is not the low-cost alternative.
It is,
to
but-
the island of Manhattan, to
No, it's a
Midtown,
relative-
to Midtown South.
relative-
It's relatively,
relative.
yeah.
Relative,
The rest of Manhattan.
but it's still less. It's more expensive than it used to be when this nonprofit had a space on a side street paying $22 a square foot.
Yeah.
And back to the concessions, you are seeing the deeper concessions downtown. And some of that unbelievable absorption we've seen in the last 2 years downtown has been driven somewhat by these concessions. In addition to Brookfield Place, I mean, $200 million they put into redoing that retail. It's,
There's no question, and they also gave major concessions.
Major concessions.
Major concessions for time and other people to move down there. You know, prior to the show in the green room, we were talking about the Hudson Yards and the Far West Side. I'd like your thoughts in general about the office market. I don't want to talk about the residential market. Retail, there's nothing there. Maybe there'll be retail one day, you know, especially with the Hudson Yards. There'll be a major retail with Neiman Marcus. How do you see the office, and who's going to move there? Who's going to move to Tishman Spires building, to Joe Moynihan's building, or to some of the other buildings?
Well, I think what's interesting is when you look at what's happened in Tribeca and moving up into Chelsea, and then you get to the Yards eventually, and everything on the west side, and then you look at everything that's happening, it's already kind of happened west side, whether it be Penn Station or whether it be Times Square West. It's natural to just continue to move there. You've got a lot of very, very well-heeled developers on that site with great levels of patient capital behind them.
But as we said before, and Mark made a very big point, with regard to you have one subway line. It's
Correct.
like somebody going, I took the L train on a Saturday from 14th Street to Williamsburg. That train on a Saturday was packed. So you take the same situation that you have 7 line going to 34th Street. It's one train. You can only run on the track a certain number of trains. You know,
Yeah.
it's
Listen, there's only so many sites where you can build new buildings.
Yeah.
That's
And that's where this site is.
and-
I mean, that's what's been, you know,
The
And new
last large
buildings
piece
are-
of dirt left.
Yeah, a large
exactly.
investment
So-
bank, a law firm, they might spend $250 a foot up front, including the work letter, whatever, that's the number. In new construction, that number's closer to 190. That's a big vig on a $500,000 square
you know
foot
what?
deal. That's on a present value basis, that can be a couple $100 million.
Alan Goldman, SJP Residential, had just recently built a beautiful residential tower in Fort Lee.
Oh.
And what he's doing is he's having a shuttle bus constantly running from there to the Port Authority on the Upper West Side on 177th Street. So I think that an area, and Lenny Litwin did this on residential and so on, I wouldn't be surprised that a developer like Tishman Spire or related would have a bus from the Port Authority or Penn Station
Sure.
to take somebody in the same way that on the show a couple of weeks ago I had with NYU. NYU has a bus that takes people to the various campuses.
Well,
have unbelievable
RXR does it at Starrett Lehigh.
And
they
IS
run it to Penn and to
Right.
And ICSC, I was at the convention at the Javits Center 3 weeks ago, and there were 15,000 people there, and they had a shuttle bus running a few blocks east, and that's what'll be, that people will be running back, and there's a lot of residential going on around 9th and 10th Avenue now. Beautiful modern residential. Glenwood building across the street from us on 9th and 38th. Some of these folk are going to end up working over there. I mean, it's just melding together. That's what's happening.
I think it'll just naturally continue to move that way. And when you have I thought the Neiman Marcus deal was a massive announcement just for the West Side as a whole.
I hate to say it was 10 years ago, and I publicly always stated my thought that the Time Warner Center was probably going to be a failure. Okay, and I have to beat myself. My crystal apple wasn't right. Okay, but I'm not making that comment now about the Hudson.
you know,
Yards.
you
I
also
wouldn't bet
have
against
somewhere
Steve
around,
Ross. Yeah.
you got about 9 to 12 million square feet of financial institutions that have leases that they have to take care of over
Coming
the
up
next
between
several
18
years.
and 23.
So,
And
you know,
also
where's it
remember,
going to go?
Chase,
Some of it's
you know,
got to go
One
west
Chase
side.
Manhattan
It really has
Plaza
to.
is no longer going to be One Chase Manhattan Plaza for
Right.
Chase.
Right.
They need space. The other financial institutions who are growing, and we're going to have, you saw Bank of China buying 1065 Avenue of the Americas or whatever, 2 Bryant Park, whatever. Everybody's
7
new
Bryant
Bryant
Park.
Park
Yeah.
now.
7.
Brian.
You know,
The Heinz building.
okay, you have a variety of things happening. Yeah, so the market looks good. How do you look at the suburban market? Okay,
It doesn't change a whole lot. I mean, take Connecticut, Stamford, for instance. The biggest deal that was done at Stamford was done by our firm with NBC Sports for almost 500,000 feet,
That's a big deal.
which is a big deal.
that
for
was
that
a couple of years
marketplace.
ago or last
That
year?
was this past year.
Where did
Actually, 2 years.
Right.
It's on Stanford on the Water.
Yeah.
But you got the alternative to that is that UBS has now put their entire building, their new building that they built, in the last 10 years,
But
on the
here-
market,
but-
and their employees are migrating back to New York City.
What is the rent in Stanford as compared to the rent in New York, into Manhattan?
High end in Stanford for top drawer
$40?
is going to be close to 50 if you're near the train station, like like Tony Malkin's building right near the train
But that's
station.
for a
You can get in
smaller
the 50s,
space.
but the normal space is going to be probably between 35 and
Yeah, for a
40.
big, especially for
Yeah,
big
now we don't see, as we may have seen 20 years ago, or 30 years ago, it's not even 20 years ago, corporations relocating to the suburbs.
It used to,
Okay,
the
we
rule of
used to-
thumb, do you
I mean,
remember
as much as we-
$35
Right,
net
You
rent?
the
differential?
ones that have are beginning to rethink it
Yeah.
and migrate back. I mean, MetLife did a little experiment in Long Island City, and then what happened?
And where do you
Yeah.
want
They're back.
where's the talent? You always hear that from, I
Yeah.
want to be where the talent is, and Manhattan now is so rejuvenated. That's where the talent wants to live, and that's where they want to work, especially these
recruiting.
TAMI tenants.
Yeah.
Now, one area which I spend time at is the Hudson, Hudson, not Hudson Yards, which is owned by Trinity Real Estate, Hudson Street,
Right.
Hudson Square.
downtown.
Hudson
Yeah.
Square, which I remember when I started being on 1010 Winds and I would record down there, there was no retail. And when Beacon built that beautiful building over there,
330.
I mean,
30 Hudson.
it's a beautiful building.
Gorgeous.
And what's happened to that market, there's a lot of retail, there's a lot of vibe, there's some luxury, beautiful new apartments, residential towers being built over there. How's the office market doing over there?
Very tight.
tight as
Very
anything.
tight. Tight as a
Telegraph
drum.
building
the rents in, like,
down there,
Yeah,
the,
yeah,
the
yeah.
beautiful iconic building.
Gorgeous, yeah.
We did a deal in there, a 25,000 foot brokerage deal, and it's mind-boggling, the building and the area.
The rents they're getting at 330 on the little bit of space they have left is in the 70s and 80s, whereas,
And low concessions.
Let's
Very low.
talk
Very
about
low.
the,
If-
the
But that-
trades.
That's
trades.
but to stay on
Niche.
that, the quality that's being delivered to the 330 or other very specific assets down there is not across the board. Quality of ownership, quality of services,
No, if
the
it's,
level
no,
of
if it's
building.
Trinity, it's a different case, like Winds, where Winds and CBS is. The electrical services alone are unique because they have to power
Sure.
this market. Let's talk about the trade center. Larry's starting to build his second building. How is leasing done? How's it doing at the trade center in general?
Well, I mean, obviously, downtown had a great year in 2014. Over 5 million square feet was leased. Of that, 3 million feet of it was migration. Time Inc., Hudson Bay, Revlon. You're seeing names now going downtown to.
When did
Our
you ever?
number- our
When would
number-
you ever
Amazes
expect
me.
Revlon to be down?
You would never
No,
do
you
that.
never expect.
But and he did a great deal with Group M. Now that's going to
Yeah.
go forward. That's what a half
So
a million feet.
when are you
so,
moving your office downtown?
when, soon.
Our-
Hey, you just caught me.
You caught me. I don't know. You got me.
Michael,
You got me.
in general, there was more activity at Brookfield Place than there was at the Trade Center.
But Brookfield Place, there were, as we just said, major incentives, major deals,
Major
giving,
concessions.
13 months concession, 15-month concession, and a full build out to the level that Brookfield built for themselves. Because I had seen the financing representing an institution, and they said, "Do you want to get into the loan?" I said, "They really have high hopes," and they did have high hopes. But if you average, you mellow the 2 years of free rent, you're not getting the rents that they're telling you because your effective rent is probably 15%, 20% lower over there. So how do you see 2000? The crystal apple has to be shining. How do we see 2015? Paul?
I think 2015 is going to be another great year. I think corporations feel confident. They're pretty cash heavy. Their balance sheets look good. You're seeing more employment. I'm not so worried about what was talked about earlier about tenants continuing to lay out in a more kind of cost-effective manner. I think the employment will help buffer that. And I've never seen in my 20-year career more global capital all at once want to be here. Whether it's Asia at one time or,
It's a safe haven.
it really
It's a
is.
safe haven, and people want to be here
Yeah.
because of the safe
And,
haven.
and corporations feel like they need to be here to attract the right talent. And kind of every area feels quite healthy at the moment.
Cynthia, you in this positive?
Yes, I'm in a positive mode. Remember, the foundation of our city is as a service city. And as these tech companies and our banks and the financial services continue to grow, we have so many tertiary service firms that will benefit from that. And you're beginning to see it in the leasing statistic, you're beginning to see it all over the place, and I think those will continue to firm.
Any cautious optimism or?
Well, you know, you always have to be cautious.
Yeah, I'm no.
I mean, you know,
pessimist,
we
that's
live in
why
a
I'm
world
saying
where there are
this.
cycles, right? The question is, when is the next cycle gonna start, or this cycle end? But I think, you know, for 15, clearly there's going to be super pressure on pricing, upward for sure. Given New York's got a great economy, and you know, occupancy levels are up.
And the
I also
prices
think,
and the prices that buildings are selling for, which is going to cause this.
and I think downtown is going to benefit the most because, you know, frankly, there aren't a lot of great pricing opportunities in Midtown South. And in Midtown, you got a 25% discount to those markets, if not more.
If not more with the
So I think
concessions.
downtown is going to be a place where there's going to be a focus.
And you, quick?
I'm looking at aged receivables for medium-sized tenants, and they're terrific through 14, so they're paying their rents. So that's how
So
it portends a lot.
It looks like Crystal Apple, you're shining right now. Okay, let's hope it continues to shine, and hope to have you back. I'd like to thank Cynthia, Paul, Mark, and Scott, and I'll see you next week.
Thank you.
Thank you.
Thank you.
Thank you.
buddy.
Thanks.